Hello, dividend executives. Welcome back. Of course, the stock market is open, but today I want to talk to you about my 15-month journey owning NVDY and TSLY. If you are new to those funds, they sell covered calls on Nvidia and Tesla each and every single month, and they pay distributions and high dividends. And so I want to talk about what the total return looks like, how my investment has been, how much money I have in them, will I continue to stay in these, and what my plan is going forward. So of course, this is my dividend account where we purchase a lot of dividend stocks. So I want to jump into these two first so we can just take a look. We can compare them. Of course, we'll jump into the spreadsheet as always. But I always like to take a look back and say, all right, here's an investment I've been in for over a year. How do we like it? Do we want to stay in it? Do we want to put more capital towards it? And what are we seeing for the future of that fund? So first things first, let's talk about the bad before we talk about the good. TSLY has netted me a negative total return, and NVDY is up big time. So we'll go over the bad first, and we'll talk about why we think it is this way. So YieldMax's option income fund on TSLY, you can see is sitting at $11.31 for the year. This stock is down 50% or $11.53, and all time this stock is down 71% or $28.81. So this is absolutely getting destroyed. When you hear about these high yield funds that have NAV erosion, this is the perfect picture of it. When Tesla, the underlying stock, is not performing, you see that compounding even more on these types of products, right? So I'm guessing a reverse split is going to be coming on this one soon, especially when we get under the $10 range. And because Tesla is just kind of just staying stagnant. So let's take a look at it, right? So our average cost on this is $23.52. We have 44 shares. Market value is $502. And we spent over $1,000, I believe, to grab this or to get all these 44 shares. Some of that through DRIP, which is dividend reinvestment, and some of that was just purchasing shares outright. But overall, right now, our total return just sitting on this stock is $542. I do want to point out though, if we do pull up Tesla, because the underlying always matters, if we look at the 1 year chart on Tesla, it's literally flat. Obviously, we've had a run up over the last couple of weeks, but I mean, the stock is down 13% year to date. That's not going to help TSLY. And even for the 5 year, obviously we're up massive for the 5 year. But if you look back even to 2022, we're sitting at 227. You look back to 2021, we're sitting in that same $190 to $200 range. So really, outside of this big jump over here in 2020, this stock has been flat for almost 4 years. So of course, it's gonna hurt TSLY. If Tesla was on an absolute ripper over the last year, then I think the price and the NAV would have held up better. Of course, the premiums would have been juicier, so we would have had a bigger payout. But those are things to note when you're looking at assets, right? These assets tend to do better if the stock slowly chops up sideways, or even if it's rocketing up sideways. That is where you're going to see the best actual return on the investment. But when we're doing these high dividend yields, we want to look at the total return, because that is where you're actually making or losing money, right? So that's TSLY. NVDY is a completely different picture, right? If we look at the year today, up 16%. We look at the 1 year, up 30%. We look at the 5 year, up 31.39%. This fund came out in May of 2023. So this one has been absolutely killing it. And as you can see, as Nvidia's gone up, this one's gone up with it. And then they sell covered calls and they collect some extra juice on the side. So let's look at our positions. Well, we have 72.91 shares, market value of just over $1,900, 4% of the portfolio, average cost $24.53, and we are up 7% or $128 on this position as of right now, not including any dividends. So really good. If we want to look at the underlying, it's a completely different story than Tesla shows, right? So if we look at anybody that's invested in Nvidia knows this stock just never stops going up. Up 190% year to date, 1 year up 246%, and then obviously a 5 year up 2,800%. This thing has really catapulted over the last year. They had a stock split, and it just never stops going up. I think we hit new all-time highs all the time. If you look at the max chart, look at that. I mean, it's just absolutely crazy. So that's Nvidia. Of course, if you were to just put the money into Nvidia in itself, you probably would have done much better. But for me and for this particular portfolio, my goal here is income ETFs, right? I am building this particular portfolio purely to have a portfolio that pays me a paycheck every single week or every single month when I get closer to the retirement age. So that's what my goals are here. If your goals are to grow your money, then be in growth stocks. If your goals are to have dividend income, then be in dividend income stocks, right? If your goals are to have market exposure, then be in something like VTI or VOO or SPY. So that is Nvidia, that is NVDY, that is TSLY. But first, I want to jump into the actual spreadsheet and let's just look at some of the data, right? So we kind of talked about some of this data, but I really want to compare the two. So NVIDIA, my total return, which is taking how much I've received in dividends, which is $830 over the last 15 months. And then my total return, which before this video was, I believe $120 I was up on the position. So yeah, my total return, was 120 plus the dividends. And so we're up $950 on NVDY. TSLY, we are down $133. So we saw on TSLY in the stock price, I'm down big, right? But when you add in the $496 worth of dividends, it's really not that bad. Could it be better? 1,000%. But on the flip side, I'm not too worried about losing $133. Do I think that I could do a lot better if I dollar cost average down? Yeah, I think so. I turned drip off a while ago, and I think if I turned drip back on and I started to lower this cost basis, we would do better long term, because I really think that Tesla over the next 10 years has a lot of positive catalysts for them. And same thing with Nvidia too. You don't want to buy high yield dividend stocks if you don't believe in the underlying, right? Because if the underlying stock you think is going to go down over time, these are just going to compound that same momentum even further. So up 950 on NVDY, down 133 on TSLY, total dividends 830 on NVDY, total dividends on Tesla just under 500. I spent almost $1,800 on NVDY, and TSLY I spent just under $1,100. So really, if you gave it another 15 months, I probably would have all my money back, which is a long time. But you have to think, at 15 more months, in the long term, that's really nothing. And this asset would just continue to pay me, and I would have all my money back. So those are the costs on both of those. On average, over the last 15 months, my monthly average from an NVDY has been $55.40 a month, and my average for TSLY is $33.07. So speaking of that, $1,100 on Tesla paying me, on average $33 a month, not too bad. Total shares on NVDY 72, just under 73. TSLY 44, and then as you saw, the share price on NVDY is 26.30. And on TSLY, 11.31. So let's take a look at this, right? The distribution rate. NVDY at 54.22%, 30-day SECL at 3.24%. This one has so much more money in it. The net asset, $1.27 billion. Whereas with Tesla or TSLY, we have $753 million. Distribution on Tesla, 124%. Now that is going to look a lot higher because obviously the share price is down, and the NAV is just eating this one absolutely alive. So NVDY is obviously the clear winner between the two. Whether you look at the charts, whether you look at the company, it's as clear as day. One is absolutely killing it in terms of total return. One is not, right? So it is a high yield dividend investor's dream when you can have something like NVDY where there's no NAV erosion. You're going up on your actual shares, and you're also getting paid that monthly distribution. If you wanted to look at the distributions, you can kind of see this one pays really well every month. $1.09, $1.35, $1.25, $2.47, $2.56, $1.19, $2.60. This one just kills it. Just pays a bunch. Obviously, you can see. It used to pay a lot less when we were back in 2023, but Nvidia moving the way it has been moving, having the volume it does have, having the options volatility, it just pays a lot more. So that's NVDY. On TSLY, it still pays a really good dividend, but that's why we're seeing the share price just deteriorate. $1.09, 81 cents, 96 cents, $1, 64 cents, 69 cents, 68 cents. So you can see it's kind of in that range. Like we said, my average on TSLY is 3307. Now that is taking into account as the position sized up, right, on both of these. So when I had drip on, obviously my positions were raising each and every single month. If we go into actual TSLY, you can kind of see the way that the drip was working. If we come down here into the, let's just go into the history here just so I can kind of show you. Let's go here and all right. So if we, looks like it only goes back to the reverse split, which you're going to be seeing another one. It's unfortunate that Robinhood can't ever keep the history after reverse splits, but whatever. So you can see here that we were reinvesting dividends earlier in the year. We got paid $25.64. We came back in. Those shares bought me 1.5. And then you just slowly increase your share count, right? So 1.5 shares there, 1.46 shares here, another 1.62 shares here, another 1.58 shares. So you can just see every month we're buying, you know, over one share and up to even 2 shares. So we were just reinvesting all those dividends, and we were continually compounding that, right? And then we bought some a little bit here and there, but for the most part, we have not made any purchases. This is the $150 purchase we did, last week, just to try to get our cost average down. We bought 4 shares. And I think I'm going to start putting a little bit more money into this. I still am a firm believer that Tesla over the next 5 to 10 years is going to do really well, especially when we get to AI, we get to bots, we get to robo-taxis. I think it's a space that is just hard to see in the current terms, but I think over the next 5 to 10 years, we will start to see a little bit of that revenue come to fruition, especially on the storage side as well. So anyways, that's where we are on the dividends with TSLY. Same picture with NVDY as well. I might as well show you the dividends that have come in. No smoke in the mirrors here. So let's just look at this. Yeah, I mean, $80, $97. These are a couple of buys here. $84, $500 purchase. So we just slowly bought and we kept reinvest. And all those reinvestments are buying us more shares, 1.7 shares. And so we just keep building it. And that's where we've gotten today. So that's NVDY and TSLY. You've seen the dividends, you've seen the reinvestment, you've seen the comparison between the two in terms of distribution rate and the total returns. If you were to select one of these into the next 5 years, I mean, I just don't think anybody out there has a story where they think that Nvidia is going to do bad. There's just too much momentum. There's too much smart money in it. There's just too much innovation. There's too much growth in the AI and chip sectors. And I just think that it's obviously a clear winner. But I do like to have the diversity, and I do like to have a little bit in Tesla, as I'm a big Tesla fan as well. So that's a comparison between the two. That's my 15-month journey. Like I said, I'm going to put a little bit more money into TSLY. I think I want to get it up closer to that $1,500 mark. So I'll probably put another 400 into it over the next month or two. And then I'm just going to let it ride. I want to get my cost basis closer, or my cost basis a little bit lower, but I also want to get my total money into this around 1,500. And then let's see how long it takes to get my money back out of it in terms of dividends. And if I'm doing, $30, $40 a month, you could do the math and see how long that is. So that's my journey with these two. They've been awesome investments so far. Nvidia is the clear winner, and it's fun to compare these high yields and see if it's worth your time. Again, this is for income investing. This is not for growth investing. I did not buy either of these for growth. If I wanted to do that, I would just buy the underlying, and I would just sell covered calls and cash secure puts on my own to generate additional income if I wanted to. But these are set it, forget it, pay me every single month, and it get as passive as it gets. So thank you everybody as always for tuning in. Hope you like the content and comparing the two and my journey in them, and we'll catch you next video.